Sahura will be with you with the global economy and market outlook in the week ahead, which is going to be the week 50 in 2025. Yes, 2 more weeks till the year end, and yeah, we are in one of the most important weeks. We are going to start one of the most important weeks of the year. In the week that we're gonna have too many central banks meetings, but the market will focus on Federal Reserve meeting. However, we shouldn't forget about the other banks meetings as well. As always, let's first start with previous week and then we can go forward and check the week ahead. Previous week, the market focus mostly was the PMI numbers, while we had inflation numbers from many other economies, especially European economy as well. And on Friday, the last day of the week, the market focused mostly on the US personal income spending and PC price index and core PC price index numbers. Starting with the PMI numbers, Monday we had mostly, we had the manufacturing PMI number from most developed and developing economies, starting from the China. In China, we had service and manufacturing from the official numbers. In both of them, we saw at the under the 50 expansions area, service sector fell from 50.1 to 49.5, while the manufacturing sector fell to increase slightly to 49.2 from previous 49, but still at under 50 expansions area. In the other economies, on Monday we had PMI numbers, and in most of them we had the weaker PMI. They were either better but under 50 expansions area. Even if they were above the 50 expansions area, they were less than expectations. Generally, the manufacturing activities, mostly in the European economies, it was not as good as expected. In the United States as well, we saw S&P, ISM manufacturing to fall to 48.2 from previous 48.7. And generally, as mentioned, in most of these economies, we didn't have a good numbers and expected numbers. The numbers were not showing that the economy at the last months of the year is moving very good. Tuesday, we had inflation numbers, personal consumer inflation number from Eurozone, and which was very interesting. Annually, core PC price index. I apologize again for my voice, and if it's not so convenient because of my. I got cold and still the symptoms is continuing. I don't know when it's going to finish and end, but sorry for that. Yeah, I was telling you, Eurozone inflation was surprised. Surprised by somehow it was surprised by somehow it was not, because if you follow our videos, this is several months, I'm talking about the weaker expectations, weaker spending with between the Eurozone and European economies by consumer spending, actually. That was nothing. That was not something that started from Eurozone. That started something that was it was something globally mostly. We saw the effect of this weaker spending in China, and then we are seeing these stuffs in these effects in Japanese economy and also in European economies. Several times I mentioned that the lower inflation in the Eurozone is not because of the great job that the ECB did. No, it's mostly because of the weaker demand and weaker spending. We can see the consumer spending annually, the core inflation was 2.4%, unchanged, remained at 2.4%. In consumer inflation from 2.1 increased slightly to 2.2. But monthly core inflation fell by 0.5% and headline inflation fell by 0.2%. That shows 0.3%. Sorry, that shows that then we can see that nothing changed in the prices with this area from the manufacturing prices. We can say, okay, that's mostly because that less demand in the market. As the demand is lower and the spending is lower, we can see the producers and the sellers, they have less prices. Don't forget, we're talking about the November and December. That's the November numbers, and about the November, which usually we should have a better inflation, better demand, and more sales. But that's vice versa, as the main reason is because of the same thing that I mentioned. Unemployment rate also increased. stayed unchanged at 6.4%, while the market was expecting to see slightly lower at 6.3%. Wednesday, we had S&P Global, S&P Global manufacturing PMIs from most economies, and from the United States, we had ISM numbers as well. On Wednesday, we had the service PMIs and composite PMI. The service PMI also followed almost the same trend that we had in manufacturing PMI, and generally, we could see that the economy is getting slightly weaker in most economies across the world, in both sector, manufacturing and service sector. However, in the United States, we had slightly the service sector moving better, and we can say that the US economy, just like it's weaker in the manufacturing and stronger in the service sector. But looking at the general trend in the world, we can say that still the both of them, the both fact sectors, globally numbers, we can say that both sectors, they are getting weaker, and especially in the November and December, the months that we should have slightly better numbers. But that's somehow the numbers that can confuse the market participant as investors and traders, and slightly make it a little bit more harder to guess what's going on in the market and what exactly is going to happen and where the prices are going. And later on Thursday, we had very important labor market data from United States, where we saw that unemployment rate, the application to use the unemployment benefits or initial applications fell to 191,000 application, which is really surprised. While it was 280 previous week, and market was expecting to increase slightly to 220,000, but it fell to 191,000. This is interesting to say that at the same day, we had challengers job cut numbers as well, and we saw that the less U.S. businesses, they're firing their employees, even if they hire less, but still they fire much less as well. That shows that the market is somehow cautious, especially looking at the numbers that we saw in the personal income and spending data. In US personal income and spending data, we could see while the personal income increasing by 0.4%, the spending is 0.3%. At the same time, the inflation, the personal consumer inflation, the headline inflation, the headline personal inflation, slightly increased to 2.8%, but the core inflation slightly eased to 2.8%. And on the monthly scale, the core PC price index is increased by 0.2%, and the headline, the PC price index increased by 0.3%. Generally, the numbers shows that we didn't have a surprise in retail sales. We didn't have a surprise in the prices, but this is why we had a better income. So which means, again, the market is more cautious, and the market participants, not just investors, even the spenders, even the consumers also, they are more cautious right now, and they are taking care more about what you're spending and what you're hiring and how they're firing their employees. So generally, the market sounds like more cautious and waiting for more signs, maybe the signs from the Federal Reserve meeting. The week ahead, which is going to happen in the week ahead, and the week ahead should be one of the most, that's why I'm saying that the week ahead should be one of the most important weeks of the year, as that can tell us the trends in 2026. While before checking the central bank's numbers, I have to tell you, in the week ahead, besides of the central bank's numbers and the central bank's meetings, we should follow the Japanese GDP numbers and the Chinese trade data and inflation numbers. Japanese trade data, GDP, and general economic data will be very important, as they are making more clear for us that whether central bank in Japan or BOJ or Bank of Japan will go for rate hike or not. Last week, we had a meeting between Mr. Oeda, the Japanese bank's head, or the governor of the BOJ, and Mr. Kaichi, the new prime minister in Japan. And it sounds like it was, the news was the news about the meeting was telling us that Mr. Ueda is trying to convince Mr. Keiichi that right now the Japanese economy need for a rate hike. That's what we understood from the meeting and the notes that came out from the meeting and the news. And then that's why we can expect with the lower, as the market also reacted to that, with the stronger getting, I mean, the Japanese yen gets stronger and also the bonds yields in Japan, the yields they slightly increase. And all of them, they are telling us that Bank of Japan is going to increase the rates by at least 25 basis points this week, this month. However, during the week, this week and the week ahead, we're going to have more economic data from Japan, and those data will make it more clear for us whether the BOG will do that or not. However, we will have much more important data from Asia as well, which I think is much more important because the export, import, and trade balance of the China will tell us what's overall going on in overall global economy. We are getting closer to the New Year Eve, and usually we saw that you should see the Chinese exported on 11%, 12%. Last year, I think it was 12 or 14% these periods. Now we can see that the market is expecting only 2.8% as the export, 3.8% as the export growth, which means that the overall global demand is lowering, and it's not the lower demand issue is not something that's just limited in China or Japan or Eurozone. It's the overall trend. So that's why it's very important to understand. I mean, with the Chinese trade data, export, import, and trade balance, we can understand much better from what's going on in global economy. Wednesday, also, we're going to have the inflation numbers from China, which we are expecting to see the consumer price index annually to increase by 0.9%. If that happens, it's going to be one of best months that we could have in September for the inflation market, as finally the inflation is slightly getting higher, while on the monthly scale, the inflation should increase by 0.3%. However, the market will focus on the central bank's meetings. At the same day, on Wednesday, we will have two central bank meetings in Canada. Bank of Canada is supposed to hold the rates unchanged at 2.25% after 75 basis point rate cut that they had in the past two meetings. However, the inflation sounds like slightly getting increasing while the economy is moving fine. That's why we do not see any, as you said, this unemployment rate also the last week in Canada eased. And we can see generally when we are talking about the Canadian economy, we can say that sorry, it's not here. Canadian. I was trying to show that the Canadian unemployment rate that we had last week. Yeah, Canadian unemployment rate fell to 6.5% from previous 6.9%. All of them, they say that the Canadian economy is moving fine. And with these numbers that we saw in the Canadian economy, we can say, okay, it's the time that the Bank of Canada to hold the rates at the same level before they want to change anything in the policies. So, but later we're going to have the U.S. Central Bank monetary policy meeting or Federal Reserve meeting ending after 2 days meeting. And market will focus not on the interest rate decision, as the market participant and investors, we know what's going on in the market, and we know that 25 basis point rates cut has a chance more than 87%. But the problem is here. I mean, not the problem. The point is here that the difference between the ideologies and the mindset about the inflation and the labor data. Now, some FOMC members, they think that inflation is high, around 2.8, 2.9%, and they need to hold the rates at the current level until they can see more clear signal that the inflation is lowering. On the other hand, some other members, they say that unemployment rate increased to 4.4%, and the economy and the labor market need more supply and support. That's why we need to cut the rates. Most probably, we can see the number of the number of votes for rates cut will be more, and they're gonna cut the rates by 25 basis point. However, because of this big differences between the idea, the big gap that between the ideas and the comments that we have in between among the central banks members or policy makers, most probably we will see that the interest rate will be cut 25 basis point, but announcement in general tones that we will receive, it will be a little bit hawkish. I mean, the bank is going to have some balance between the statement and between the decision. That's why most probably I'm saying that what I believe, what I think is going to happen is that dovish decision with the hawkish tone in the dovish decision that can balance both sides. Anyway, we will have the other central banks meeting, including Bank of Brazil as well, which is expected to cut the rates by 25 basis points from 15% to 14.75%. As the Brazilian economy, inflation is already under control somehow, and the economy for sure will need more support, especially with the higher rates at the 15% is a little bit risky. At the same day, we have a central bank meeting or National Bank of Swiss National Bank as well, SNB, and we are expecting to see the SNB to hold the rates at 0% as the economic data from the Switzerland was not such a nice numbers. That's why we expect to see that central bank to support the economy, to decide to support the economy a little bit more. Before that, we will have on Tuesday. We're gonna have the central bank meeting in Australia as well, where the RBA or Reserve Bank of Australia is supposed to cut the rates to hold the rates at 3.6%. The Reserve Bank of the Reserve Bank of Australia thinks that right now the labor market. I mean, what we can understand from the policymakers' comments in the recent days that the labor market is fine in Australia. The inflation is slightly getting higher, especially getting closer to the New Year Eve. That's why the central bank decides most probably to end up, to hold the rates. But the thing is that in the statement, people will, or investors, for traders and investors will look for these, that whether they will tell that that's going to be the end of the rate cut cycle, or they will still leave the rooms for more rate cuts. That's important to understand. I mean, market participants want to see that the statement will tell, okay, that's it, and for now we are not going to cut the rates, or they will tell, no, we're going to continue to cut the rates if the data says us. That's the same thing that we are expecting for the Bank of Canada as well. Looking at the charts, let's start with the charts and see let's start with the market risk chart with the weeks. Where is my chart? To see what's going on in the market. And with this data, what we can expect from markets. Looking at that, we can say that the market risk or VIX right now moving at 17.20, which is fine, acceptable levels, and you can see here that the market risk after reaching above 23, VIX is slowing down, and that says that the risk is a little bit lower compared with 2 weeks ago. That's why the risky market also should be more stable, and risky asset also should be more stable right now. As an effect, if you look at the US dollar index, the dollar also slightly eased from the above 100 mark that we had 2 weeks ago to down to 98.17 on Thursday, but on Friday slightly increased around 90 towards 90. That was and then slightly lower, but moved towards 90. And the market 90 also is fine. I mean, for the U.S. economy right now, this is somehow it's the border right now between the hawkish and the dovish ideas. And with the balance that we talked about, the statement and the decisions, we are expecting to see the dollar index again moving sideways around 90. We're not expecting a weaker dollar than these levels. Same thing we are expecting to see about the gold, as the gold is trading about $4,000, and we're expecting to see the gold still hold this $4,000, slightly higher or lower, but $4,000. mostly above $4,000, $200, $4,000, 100. And that gold generally is still positive, and we're not any card, any weaker number in the gold chart will be buy position or buy opportunities. In energy market, while the market is getting, while we're getting closer usually to the year end with the more troubles, and we can have the more demand, while the market shows that US inventory is also slightly eased, and that can increase the demand for the market. Prices around the $60. We had other reports as well that in the week ahead also is going to be very important to understand what's going on in reports, in the monthly reports, which we will have from the OPEC, we will have from the IEA and EIA, which they're publishing usually the monthly report at the first or second week of each month. S&P 500 and Dow Jones, we are expecting to see these two big indexes sideways with the slightly downtrend tendency, but NASDAQ with the tech companies sideways with slight uptrend tendency. That's what we can expect for the week ahead, with the gap between these stocks that between these indices that we're holding here. The thing is that market now counting on the rate cut as mentioned, but the rate cut is not going to be a final solution. That's why the Federal Reserve, Fitcher Powell, and Federal Reserve members, most probably after the meeting, will somehow soften this decision. So we will see the rate cut by 25 basis points, but hawkish tones in the statements, hawkish tones in the speeches, in the press conference. That's why the balance should continue there, and we shouldn't see the surprise in the market. What is very important in the Federal Reserve is their dot plots and what we are expecting to see in a dot plot and what they're telling in a dot plot. That's the most important thing that we can understand what the Fed's plan for 2026. We will talk about the central banks meetings before the meeting, most probably during the week ahead. You're going to follow us on social media. We will talk about that and explain about that more. Looking at the Bitcoin chart, we can say the Bitcoin still is negative. Finally, again, under 92,000. And as mentioned before, 92 and 94,000, they are the first and the second resistance. Under 92 and 94,000, downside is still there. But if the price moves above $94,000, this area, we can see that the downside is trying to change. But uptrend would not be sought until the price cannot move above $97,000 and 500. So under $97,000, the price is still downtrend. Between $92,000, $97,000 is a sideways. Under $9,000, $92,000 is a downtrend. This is what we can understand for the Bitcoin chart. Yeah, that was what happened previous week and what we are expecting for the week ahead. If you had any other question, don't forget to write in the comment section. I'll try to get back to you as soon as I can. Have a good time. Bye.